First up, the day's market action, where the last street witnessed a tug-of-war between the bulls and bears today. A global risk-off dragged the Sensex and Nifty for the second straight day. The Sensex ended a point below 35,200, while the Nifty just about held on to that 10,600 mark. The banking index and the mid-caps outperformed significantly as both the indices closed 0.5% higher in trade. Anuj Singhal is standing by, as always, to analyse the day's trading further. Anuj, sector-specific movements were visible in today's trading action.
Well, mixed trend for the market today. What was clearly visible was that money was being taken off IT and it was being moved to banks. Now, that's been a trend for some time now, all through this month. In fact, the outperformance of Nifty Bank compared to Nifty IT is now reaching a staggering 10% for this month. Mid-cap also resumed outperformance today. Reliance, Infosys, TCS together accounted for almost 57-point fall on the Nifty. HCL Tech was also low. Gaining side with names like DRL, Grasim, Yes Bank, UPL did well, and the Bajaj Finance also did well. And in the F&O space, you had more gainers than losers. Names like Federal Bank, Vodafone Idea, IRB Infra, Exide, Dalmia Bharat, and GP Associates. All in all, the bull should be reasonably happy with the day, although it was down on index level, but mid-caps did well, and the Bank Nifty, sort of the leader of the market, also did well. Overall, let's see how things move tomorrow, because it's the weekly options expiry as well. And of course, then we have a long weekend. So tomorrow could be an interesting day.
All right, Anuj, thank you very much for joining in with that report. Now, amidst the tug-of-war between the government and the RBI over liquidity, sources close to RBI tell CNBC TV18 that some loans given to builders are sparking concerns. Now, CNBC TV18 learns that nearly 10% of the loans disbursed by the NBFCs and housing finance companies may not be backed by projects on the ground. Lata Venkatesh broke us here with more details. Lata, how worried is the RBI and just how bad is this situation?
Well, actually, this is more a retort to the constant refrain from several ministers that Reserve is keeping liquidity very tight. The sources which are close to RBI say that there's no problem giving liquidity generally to the market, but to give it to specific NBFCs or HFC sectors, or to even goad banks to go ahead and buy up NBFC loans should be done with caution, because their belief is that the NBFCs are, after all, not as well regulated. It's a light touch regulation, and probably some of the projects have been evergreened only to repay previous loans. And actually, there is no project on the ground for some of the loans given by the NBFCs and HFCs to the building sector, to the builders sector or the construction sector. They worry that there could be at least 10%, though of course there are market men who believe that it could be even more than 10%. But my source, who's very close to the Reserve Bank, said that the Reserve Bank believes that at least 10% of the loans of builders could be really unbacked by any asset at all, and therefore questionable loans, and therefore will be very cautious about goading banks to go and lend to the NBFC sector, or even giving any kind of help to this sector. They have to be very watchful.
All right, Lata, thank you very much for bringing us that report. Now, we'll stay with the liquidity issue. Now, even as the central bank fears about the quality of select NBFC loans, the government is calling for new measures to address the liquidity challenge. Union Minister of State for Civil Aviation, Jayant, now spoke to Shireen Bhan earlier and asked the central bank to examine the need for unconventional moves to boost liquidity in the system. Now, Sinha believes that the NBFC sector is struggling without liquidity, and that is hurting their ability to lend. He also went on to say that policymakers are worried about the tightness in the credit in the economy.
The circumstances that we are facing, the high NPAs, the liquidity shock that we've had for the NBFCs, the growth of the shadow financial system, the consolidation of the public sector banks that we're trying to go through, all of these are a particular set of circumstances, and under those circumstances, we really do have to think about, how the role of the RBI itself should evolve. Should the RBI undertake more bold decisions around this? Should they take unconventional steps to strengthen the financial system? And I'd like to remind you, Shireen, that every time there has been a financial crisis in the West, whether it's in the US or in America, in England or in Japan, there has been an evolution. You know, institutions have responded to those challenges, whether it was quantitative easing, whether it was the unprecedented negative interest rates that we had in Japan. You know, central banks are prepared and capable of doing unconventional and bold things as well.
No,
I think we need to examine that in India also.
Okay, but we're not. I mean, are we in the midst of a crisis that requires such unconventional thinking and an unconventional approach? Are we in the midst of that kind of an economic crisis?
What I'm saying is that there is one aspect of the economy, of the financial system, not the economy, the financial system, which is the shadow financial system, which is the NBFCs, where we have gone through a liquidity shock because of what happened with ILFS. Now, in that particular segment of the financial system, do we need to do some unconventional things? Do we need to think about what else RBI can do? Also, we are dealing with an NPA situation that is unprecedented because of the promiscuous kind of phone banking that was going on in the UPA government. We have to deal with that issue as well. We are dealing with it. Under those circumstances, is the RBI and its role going to evolve? Of course it should. And that is a discussion, that is a collaboration that has to happen between the RBI and the government. When it comes to the NBFCs, obviously they are facing a liquidity situation where they can't borrow at the rates that they were borrowing earlier or get the kind of liquidity that they were getting earlier on the wholesale financing side. And as they face tightness as far as wholesale financing is concerned, as they try to be more prudent in their lending, what is happening is that as far as their lending is concerned, as far as their disbursement is concerned, we are seeing very significant tightening there. And that is credit that's not going into the economy, and it's particularly not going into the MSME sector. So if you step back and look at what's happening in the economy as far as credit is concerned, that is something that as policymakers, as all of us who worry about how fast the economy should be growing, how fast investment should be growing, are concerned about. Now, what exact actions have to be taken, that really is for those who are in charge, those who are responsible, to figure out and make the appropriate trade-offs.
Now, veteran banker Uday Kotak says he's happy with the outcome of the RBI board meeting. Terming that outcome of the meeting as positive, Kotak said that the decisions will ultimately help the economy.
No, I'm very happy that there is positive outcomes which ultimately will help the economy, and I'm glad that the board had a debate, and I respect the judgment of the board.
Now, disagreements between the government and the Reserve Bank of India may not be disruptive for the global investors currently, but it is on their radar. That's the word coming in from James McCormack, MD and Global Head of Sovereign Ratings at Fitch Ratings. While speaking to CNBC TV 18 earlier, McCormack added that we are likely to see more disagreements globally between the governments and central banks in 2019. Here's a slice of that conversation.
When we look at big emerging markets, the potential growth rate here in India is by far the strongest. It will grow stronger or faster than China for the foreseeable future. That's something that we expect to continue. That's fundamentally a pretty positive story. That suggests to us that the macro policy framework is a good one. The structural reforms that the government has been involved in initiating are positive and having good economic impact. So all of that is positive. I guess the one big issue that we think about from a sovereign rating perspective is really still the relatively high level of government debt. So when we look at it on a consolidated general government basis, it hasn't really changed much in the last few years, even with the higher growth rates. And if we look at the consolidated general government balance, so the fiscal balance, it's improving for the central government, but deteriorating at the level of the states. So a combined balance hasn't really changed either. So we've got this strong growth story on the one hand, but not really a strong public finance story. I think those are the things that we have to balance when we think about the rating.
All right, but what do you make of the very public tensions between India's central bank and the elected government on a whole host of issues surrounding regulation of banks? Is that a serious risk from the investor's point of view, this standoff, so to speak, between the government and the regulator?
Well, it's certainly going to get investors' attention, and I think investors are starting now to tune into this story. It's not necessarily something that makes investors entirely comfortable if you've got policymakers in open disagreement with each other. I think we're not really at the stage yet where it's disruptive or it's disruptive for international investors. It is now on the radar screen, and I should say that this is something that we're seeing play out not just in India, but in a number of countries. I think that the discussion between governments and central banks is something that India may be at the forefront of this, in essence, because it's something that we think we're probably going to see more of in 2019. So it is something investors will have to be more comfortable with. I think as long as the debate and discussion is one that works towards policy solutions and not confrontations, and I think that's what we're seeing in the last couple of days here, then we can be comfortable that, comfortable in the view that policymakers will arrive at a decision that kind of works for everyone.
All right, let me then close by asking you, what will be a trigger for a rating action for India, positive or negative, if you could give us both of those?
Well, I think in both directions, it's really the same issue. It all surrounds public finances. So if it's an increase in government debt from where we are today, that would be potentially problematic, given that the debt level is already relatively high. And I think conversely, if we were confident that the debt profile were going to improve going forward, that would give us some confidence in moving rating higher. Because in terms of the external finances for the country as a whole, which have been getting a lot of attention, not something that really gives us cause for concern.
Now here's a big story from the aviation space, where Jet Airways stocks rallied over 6% in trade today on the back of a CNBC TV 18 news break that Naresh Goyal and Etihad are in advanced talks to infuse liquidity into the cash-strapped airline. Now this is an attempt to avert a distressed sale to Tata Sons. Nisha Poddar broke that story and is with us now to give more details. Nisha, what kind of a deal are we talking about? Give us more details.
So sources with direct knowledge share with us that Naresh Goyal, the promoter of Jet Airways, is in advanced talks with the large shareholder of Jet Airways, Etihad, to really work out a solution for the immediate financial needs of Jet Airways instead of going ahead with a sale at lower valuations. They also think that what other players like Tata Sons could offer could be a distressed sale kind of a scenario, which needs to be averted at this point. So the restructuring and the deal that they are working on could immediately infuse about $150 million into the company. What they are discussing at this point is that Etihad, with controlling 50.1% stake in a Jet Privilege, which is a step-down company, could really merge with the company and free up the $150 million cash in that, which can be utilized by the airline. On the other hand, in lieu of this particular stake in Jet Privilege, Etihad could get a higher stake in the parent company, Jet Airways, increasing it from 24% to above 35%. They both, Naresh Goyal as well as Etihad, could be even equal partners after this particular transaction. Then both put together can bring in more cash into the system as well. The experts, analysts have said that of the $1.1 billion of total debt on the books of Jet Airways, immediate requirement of $300 million needs to be met. So these are the talks going on. We do gather Naresh Goyal is in Abu Dhabi to really decide on this particular negotiation. If this happens, any deal on the front of Jet Airways would be called off, but we still have to see how this goes.
All right, Nisha, thank you very much for joining in. We'll leave it at that. Now, here's the latest in the Yes Bank case. In a bid to restore confidence and arrest the fall in the bank's stock, Yes Bank's MD and CEO Rana Kapoor and board member Brahma Dutt released a joint statement late last night, acknowledging for the very first time that a truce was in the offing between the warring co-promoters. Now, Yes Bank has said that efforts for a mutual resolution with Madhu Kapoor and her family are underway, which would ensure better support and coordination with the board. Now, referring to the recent board resignations, the statement further said that the exits would have no impact on the selection of a new MD and CEO. The bank further said that the CEO selection process is on track as per committed timelines, and the search and selection committee is also scheduled to meet on the 12th of December to discuss the final shortlist for Rana Kapoor's successor. Further, the bank has also advanced its board meeting to 13th of December to consider the appointment of a new chairman, 2 independent directors to replace the departing directors, and also to review the progress of selection of a new MD and CEO. Now, moving on, after several multinational companies expressed their reservations against data localization, the European Union has come out and called it a burden for businesses and free flow of data. Speaking exclusively to CNBC TV 18's Rituparna Bhuyan, EU ambassador to India added that EU does not allow data localization. Listen in.
In our internal EU regulations, we don't follow this principle of data localization, as we think that it could be a burden for developing business-to-business contacts. That's why our position or our advice to the Indian government is to look at this, and this is our advice on the basis of our experience.
Perhaps it may not be the way data localization norms are being proposed. It may not be conducive for business-to-business relations between Indian and European companies. Is that
data localization always is a burden and is a barrier for free flow of business data between different entities.
Right.
Now, the farmers in Maharashtra are on the march for their long pending demands yet again, and over 20,000 farmers belonging to different parts of Maharashtra, including Vidarbha and Ahmednagar, began their march from Thane today. The two-day protest march will culminate at Azad Maidan tomorrow. The march has been organized by Lok Sangharsh Morcha, and the farmers say that their protest will continue till their demands of implementing the Swaminathan Committee report, setting up of a judicial system to ensure minimum support price implementation, complete farm loan waiver, drought compensation and other demands are not met. Now, Rajasthan and Chhattisgarh as well as Madhya Pradesh are in poll mode, and the Bharatiya Janata Party is playing a defence on all of these three turfs. Union Minister for Human Resource Development Prakash Javadekar, while speaking to my colleague Parikshit Luthra, weighed in on this anti-incumbency issue and explains why he's hopeful that his party will come up successful against the odds.
The alteration will stop this year, because there is no rule that every time there will be once Congress, once BJP. We have all anti-incumbency issues, and we have maintained our states like Gujarat, Goa, and we have won many other states. In 14 we had 6 states, now we have 19. And Congress had 16. They have lost it, now they have only 4. So Congress is losing, BJP is winning. That's the rule what we see all over India. And so we will maintain all our 3 states, Madhya Pradesh, Chhattisgarh and Rajasthan.
Okay, so Mr. Javadekar striking a confident note, but the fact is in every rally around the country, Rahul Gandhi is speaking about farmers' distress. Over here also, Congress says there have been over 100 farmers' suicides. Do you think there is now a perception that the BJP is an anti-farmer party, and somehow that needs to be addressed?
Congress is the suicide of farmers all over the country is the result of anti-farmer policies pursued by Congress for over 50 years. Because Congress never gave them comprehensive insurance, Congress never offered them real prices. That was their demand for 40 years. Then they never gave them water and the due credit and many other things. We have given them fertilizer, Fasal Bima Yojana, and more importantly, remunerative prices, 150% or 50% more than the cost of production. It was landmark decision of Modi government, and now farmers are so happy because they are now assured of minimum support price, which is 150% of their cost of production.
Right. You know, Sachin Pilot has questioned the BJP and Vasundhara Raje on employment figures, saying that the youth are unemployed, millions of youth across the state of Rajasthan are unemployed, the economy is suffering, farmers are suffering, crimes against women is on the rise. All of this has not been addressed.
That is really, again, a legacy from Congress days and Congress misrule, because they drove economy to such a level in a socialistic pattern that we never grew to the potential. Now we are on ease of doing business, we are 77th in the rank, and now that brings in investment, that brings in more industries. That in Congress regime there were only 2 mobile factories, now we have 124. So this is how employment grows in each sector. Now the IT sector has shown a robust growth in employment. Not only IT, but all the infrastructure development. If Congress was doing 7 kilometers per day of national highways and we are doing 28 kilometers per day, that increases the employment.
Now, staying in the realm of politics, the big development from Jammu and Kashmir today, we learn that an alliance between the Congress, National Conference and PDP has been finalized and an announcement is likely very soon. Remember, earlier this year in June, the Bharatiya Janata Party called off its alliance with PDP, the state, and since has then been under the governor's rule. Now, the PDP currently has 28 MLAs in the 87-member assembly. The National Conference and the Congress have each 15 and 12. Now, if the PDP and the National Conference and the Congress form an alliance, they will have enough numbers to form the next government in the state. In fact, a while back, Altaf Bukhari of PDP gave a statement. He said, and I quote, "My leadership has confirmed it to us that the three parties, Congress, PDP and NC, have agreed to make a coalition to defend the special identity of the state politically and legally. Very soon, you will get a good news." End of quote.